The start of the month, the RBA delivered its 10th consecutive interest rate rise. And if you're looking to buy a home, what questions should you be asking the banks? Or if you're thinking about refinancing, what should you be looking at? Peter White's the Managing Director of the Finance Brokers Association of Australia. Peter, good morning.
Good morning, Kelly. Thanks for having us on this morning.
Are you finding that this is a time when people are thinking about moving banks, getting a better deal?
Oh, Kelly, most certainly with all these interest rate movements that we've been living with over the recent past, that everybody's trying to look to get a better deal, and so they should. The challenge is finding one and making sure that whatever you're looking for is actually suits what you need. It's one thing to get a good deal, but if it doesn't tick the boxes of what you personally need with your mortgage and so on, then you've got to look very closely at that to make sure you make the right decisions by yourself.
All right, so what sort of things should people be looking at?
Well, if you're looking to refinance to another lender, be careful of the traps with all these cash incentives at the moment. They sound great, but nothing's free. And what you need to look at is to understand what is the difference in the repayments, so how much you're going to save by doing it, versus what is it going to cost you to actually make that move. So you could be up for more legal fees, more stamp duty fees, a new valuation. There could be all sorts of bank give me another fee style of things that goes on.
Yep.
So you got to weigh up the pros and cons of that to see if it actually financially works out for you. But you also need to understand that, needs to do some research to have a look at to understand what are that bank you're going to, how do they treat their existing customers versus what they're trying to tease you or encourage you in with. Because there's about a 0.5% difference between existing borrowers and new borrowers. Right?
Okay, so are you looking at...
That's something...
Yep, go on.
Yep. I was going to say, so some things look good, but then you get badly treated down the track. Right.
Okay, so this is a case of it might look good in the short term, but in the long term, you're not either saving yourself money and possibly you could be paying more money.
Correct, that's right. So a little bit of homework to be done on that, and I encourage people to get expert guidance on it when they do it, whether they speak to their broker, their accountant, whoever it may be. But you need to look closely at this, that you don't take on something that sounds really great at the time and is emotionally driven, more so than thinking with your head or looking and going, well, this is going to work for me for 8 months, and after 8 months I'm going backwards again.
Yeah. So, Peter, at what point is it viable and a good decision to refinance your home loan?
Oh, Kelly, it's always a good decision to be looking at it. It comes down to the maths. Right? And I know that's getting back to what we were just talking about, but you should always be looking at these sort of things. Look at how the maths impact. Don't do it too often. I mean, at the moment, again, because of all these cash incentives, people are doing this on far too regular basis, and the actual average life of a loan is actually coming backwards because of this constant turnover within people's loans. And, of course, of the costs that you incur when you change, if you do it too often, all of a sudden you are going to, quite simply go backwards, and any potential benefit you might have got is actually going to play against you. So there's a balance in this in regards to everybody's own personal circumstances. So it is very individual like that, but also knowing that you should keep an eye on this and just don't take what the bank's giving you. And if you've been with the same lender for more than 2 years, I would actually encourage you to have a very close look at it, because there's every likelihood you're paying over the odds compared to what new borrowers are paying. Okay,
so this is what they call the lazy tax, and it usually happens with insurance.
Yeah.
Where if you don't change your insurance provider and you just pay it, they will make you pay a premium because, well, look at that, you're not paying any attention, Kelly. We'll just put that through the roof. So is it worth then saying to your bank, like, is there any point going to your bank and saying, I'm thinking about refinancing? You've been great, but what can you offer me? Because otherwise, we'll part ways. Does that work?
Yeah, it does work, and it should be one of your first ports of call. I always recommend do some homework first, have a look at what the market's doing, go to your bank first and try and renegotiate there, because if you can, that will save you all the fees. And some banks are actually still paying out those cash incentives to keep you there, where they're doing that for new borrowers. There's a whole host of things they can potentially do if they want to and if they get pushed to. Otherwise, yes, it's a bit of a lazy tax. So you're just going to own it and you're going to be worse off for not asking the question.
Peter White is Managing Director of the Finance Brokers Association of Australia. You're on ABC Radio Brisbane and Queensland with Kelly Higgins-Devine this morning. And we're just talking about refinancing. A lot of people getting to the end of that honeymoon period they might have had with fixed rates. And this is the thing, isn't it? As people start to look at that big jump they're going to be getting after that honeymoon period, is this something they should be thinking about now, having a look at where they're going? Or it just all seems like such a big gamble, Peter, because you really don't know what the RBA is going to do and whether rates are going to go back down again. You know, people are saying maybe near the end of the year, but who knows? Like honestly, it feels like a bit of a crapshoot.
It does. I'd say it's a bit of a throw of the dice. So but here's a part of the reality of the market at the moment. I've been 44 years in this game, so I've seen recessions, I've seen GFCs, you name it. It's been through it. And the reality is there is still likely to be 2, possibly 1 more rate increases before the end of this year at 0.25% each.
Yep.
The chances of there being 2 is a good likelihood. Chances of 1 rate rise is really subject to how we're performing from an economy point of view.
Yep.
And depending on that, and there are signs that that's happening, then we might get away with 1. What we hope very much that the Reserve Bank actually pauses next week and doesn't increase rates and actually has a fair income review of how the economy is going rather than a constant knee-jerk reaction and putting these rates up all the time. So I think there needs to be a bit of a pause next week when the Reserve Bank makes their next decision.
Yep.
See how the markets are truly going for that bit of extra time and then make a decision after that, because the signs of corrections and inflation coming down and so on, most of those indicators that sit underneath that are actually starting to show positive for the inflation rates coming down.
Yeah. So
if that's the case, you've got to be careful you don't go too far. And I spend a lot of time with regulators in our industry, and they have a bad habit of over-tightening the nut and then looking at, oh, geez, that was a bit harsh, and then backing it off a bit. Well, you need to play a little bit smart in that, especially with everybody going through so much pain. I mean, you'll ask callers conversations around what they're going through. We sit in the marketplace. Mortgage arrears are starting to take a slight kick up. It's starting to tick up a bit. And, we're concerned, of course, because when we hit June, July, that's the peak of people coming off 2-year fixed interest rates where it peaked 2 years ago, right? Yep. And so this is that cliff that's coming up for a lot of people. They've been sitting on interest rates with a 1 or a 2 at the beginning of it.
Yep.
And they cop something with a 5 or a 6 at the beginning of it once they come off that period as we get to the top of that bell curve. So, we're very concerned as how that plays out. We don't want to over-tighten that nut just now if there's no need to. And I think that there needs to be slower movements and more reflectiveness on what's happening in the marketplace before these jumps are taken again.
So, Peter, finally, for anyone buying a home, what would be their best option at the moment? Fixed, variable, a mix? Once again, I feel like it's $1 in a pokie machine. Like, okay, let's sit and see how we go.
Yeah, it is a little bit like that. Again, it comes down to personal circumstances and what you're doing. So if you're looking at, I guess the risk is that as we get to the end of this year, will variable interest rates come back a little bit, and it is predicted that will happen too. Yep. So maybe, if you can get a really good fixed rate, if you don't want to do anything with your mortgage, so if you just want to pay your monthly payment, be secure in knowing what that is, you don't want to modify the property you just bought, you don't want to do anything except just pay the monthly payment, then maybe a good fixed rate, if you can get it, is the right option. But you've got to be careful you don't overpay for that, because if we get 1 or 2 more rate rises, it'll put us into the low 6%, if you like, as a variable rate. If you fix it 6.5%, and then next year rates come back a bit, then you're going to be worse off.
That's
right?
it.
So it may be that a part fixed, part variable works to hedge your bets, or it may be that you ride the variable rate wave for the moment on the expectation that, Hopefully it comes back early in the new year. And maybe there's only one rate rise between now and Christmas, noting that there's likely to be two. And then sort of, basically hedging your bets as you get into next year. It's going to be really difficult this year because we really need to see that further changes in economic factors that impact inflation to play out a bit more before it becomes a bit more of a no-brainer. But first of all, you look at what works for me. If I want to buy something and do some work to it and I want to borrow money to do that, then a fixed rate is probably not best for you.
Yeah.
It could be a combination. It comes down to the personal circumstances. And
all right. And
making sure you don't box yourself into something.
That's it. Peter, thank you so much. Peter White, Managing Director of the Finance Brokers Association of Australia. And, of course, you should seek your own personal professional advice before you make any decision about, if you want to, about loan financing. But having a chat with somebody is probably your best way to go.